Davis from ADK Wealth Advisory Group. As I was studying finance at Drake University in the 80s, I knew I wanted to be a finance guy, but I really didn't know what that meant. And the way that I recognized that is I was up having a drink in Chicago with several of my fraternity brothers from Theta Chi, and all of which, incidentally, were finance majors that I had studied with. In Jeff Church, as we were talking about what we were doing with those degrees and I explained what I was doing, he looked across the table in a sincere fashion and he said, "Oh, you're a mutual fund salesperson." Initially, I was offended, but after some introspection, what I came to realize is that he was right. And it took me several months of thinking through and experiencing the feelings around that to kind of determine that's not what I wanted to be. What I wanted to be was a financial advisor. And so over the next couple of years, I worked through and struggled through what does that mean? And then how do I need to transform myself and the business that I was part of to be a real financial advisor? And after serving in the financial planning industry for over the last 25 years, I've come to the conclusion that consumers and the industry itself have a very hard time defining or coming to an agreeable definition of what is financial planning. So, as an independent certified financial planner, I wanted to share with you my opinion of what financial planning is and what financial planning is not. So, financial planning is an organized process that really helps people pursue their life dreams and financial goals. In order to do that appropriately, it has to factor in people's goals, their emotions, their financial resources, and many other categories. So for example, when we think about what's important to people financially, it might be retirement planning. It might be educating their children. It might be estate planning or income tax planning. The best way to assess that is to go to the Certified Financial Planning Board, their website. They have a really good, understandable format of what is financial planning. The process should be systematic, it should be relational, and it should be helping people focus on their goals, their concerns, their fears, and their motivations. Next, the process should use some analytical tools that really help you understand with the resources that you have, with the goals that you have, are they achievable or are they unrealistic? And then lastly, because life happens, you should review your plan, if you will, at least annually to make sure that as things change, that you modify and stay on track, and if you're off track, that you're aware of it. There are some things that I think are problems. One of those is whoever the person is that's driving the financial planning process, they have to be equipped to deal with the soft side and the hard side of the process. The soft side is really human emotions. All of us have human emotions and we know how complex they are. When you bring in money into the complexity of human emotion, you know what that means. So for example, when it comes to estate planning, my experience is most people don't have what I would classify as a world-class estate plan. Estate planning really means that you're dealing with if you become incapacitated or if you die, that whoever steps in and handles your affairs isn't dealing with a mess and is able to make sure that what you want done actually is able to happen. When you take a look at the hard side, it's really the analytical process where you use tools to project and evaluate, and making sure that you use best practices in those tools is of paramount importance. So for example, I'm ashamed to admit that the first 5 years of my practice when I came into financial planning, we just kind of took people's retirement expenses. We said, do you think they're going to have 60%, 80% of what they need, what they used to live on, and then we projected that out. And then we kind of came back and said, you have enough or you don't have enough. Well then, after watching people and referring back to that plan, what I realized is there's things like medical expenses that should be separated out when you're doing those, because you have to project those at a much higher rate of inflation. The other thing that, as a member of the Financial Planning Association, having been a president of the local chapter, studying best practice of other advisors and watching what happened with my clients, I kind of realized that when people retire, if they had children that they were paying for college, a lot of times their expenses don't go down nearly as much because they were deferring some things that they wanted to do, like travel. Conversely, we've also seen people that when they retired, they were already very well versed in travel, but they wanted to travel a lot more. And so all of a sudden the first 5 or 10 years of retirement, they're traveling a lot. But then due to either health or they just have gone all the places they want to do, they fall off. So being able to really project people's expenses properly is an essential part of that analytical tool. As I alluded to earlier, whether it's a financial crisis like we saw 2000, 2007, or just health changes that people experiences, or you inherit money, the financial plan needs to be revisited and we need to adjust accordingly as things happen. Probably the last problem is what I call is the conflict of interest. It's really understanding the person who's driving the process. Do they have conflicts of interest that are the way they get paid may be contrary to what's in the best interest of the customer? Or is the institution have motives of bringing their products to the table instead of really bringing the best products to the table? My two pet peeves are salespeople dressed up as financial planners and financial institutions that mimic financial planning. The first, if you really take a look at it, it's someone who uses a lot of the soft side language to understand your emotions and then uses that as a way of presenting products that seem appealing, mirrors that in a financial planning context, but doesn't really actually do the financial planning work. So they don't do the hard part of it, which is all the financial analysis that really behind the scenes takes like 5 to 20 hours. Nor do they do the ongoing review of your situation to modify the financial plan. And the second really is, if you can imagine you're watching TV or you're looking at a magazine and pictures are used of a couple on the beach or someone on a sailboat. And so they're really looking at your life dreams from a retirement perspective, and they're painting this picture of helping you achieve those things. But in the end, really what they're doing is they're a distribution channel for the products that they serve. And many of the big firms, if you know their name because they advertise on TV regularly, fall into that pitfall. A financial planner is someone who really embraces and takes clients through the financial planning process. It's not someone who's being driven by a sales process, but rather being driven by an advice process. In summary, financial planning should help people pursue their life dreams and financial goals. It should factor in emotions. It should factor in analysis and ongoing review. And on your journey, I would encourage you to figure out what financial planning means to you. In closing, what I'd like to say is, if you'd like to learn more about financial planning, either go to the CFP Board's website, the Financial Planning Association's website, or Discover Independence, which is our website. If you're interested in learning more and you'd like to contact us, our information is there. If you're a client, I'd like to thank you for your time, your business, and encourage you to share this with your friends and family. Thank you for your time. Bye-bye.